Hey guys, Boris Lansberg. Welcome to our BK Forex Weekly Forex Technicals for the week of 5/27/31 of 13. As always, trading foreign exchange on margin carries a high level of risk. It may not be suitable for all investors. So I ask you to read this disclaimer very carefully and to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, I think the key story for the week upcoming, which will be the last week of May and the beginning of summer, hopefully for anyone who has been suffering through the miserable weather in the Northeast, is where is the dollar now? Where is the dollar rally at this point? Looking at the technical clues, we're clearly in the midst of a small correction in dollar yen, which could turn into more of a topping formation if some of the key levels to the downside are breached. If you look at the analog that we had in the first major breakout that was here, sort of the big push here to the prior to the 100 level, from 95 to 100. The correction here took us sort of right back towards the initial breakout level. In this particular case, the initial breakout level for the analog would be the 100 level. We had about 2 or 3 days of correction. Here we have about 2 days of correction, and we definitely test the key probative level from the breakout. So if you were to apply the analog price action from the time we broke out towards the 100 from the 95s, then the analog price action would take us to a test of about 150 at least, perhaps even 125, right above the key breakout 100 level, which was the next up leg of this move, before we kind of consolidate and perhaps rebuild higher. So I still think, looking at dollar yen, the balance of risks lies more to the downside than it does to the upside. The upside is essentially capped at the 103.75 level, and any kind of a counter trend rally here is going to continuously run into all this resistance, and it would really take a very powerful surge for us to now take out the 103.75s. If we do, then of course the whole bearish bias goes out the door, and you would turn bullish again on a technical basis, and then you're looking at 105, possibly even 106 as the next target. But the struggle and the consolidation that's happening now feels like it's basically sell a rally mode or sell a break mode than it is any kind of a bargain hunting at this point. So that's where I would look on a near-term technical basis as a possible trade. If you want to look at this on a more let's look at this on an hourly basis and just see what happened today. Today was kind of interesting because we tested the one, we probed the 101s, tested it, took it down, and the markets, obviously bought us back up at the end of the day. It's a mildly bullish technical signal, but it's end of the day ahead of Memorial Day weekend, so you can't make just too much out of it just yet. Obviously, to the top side here, you have the 102s as resistance, 102.50 as resistance, and then 103 and 103.50 as resistance. So there is a potential here for some sort of a bounce, but I think the bounce gets progressively more difficult to make upside progress as it goes higher. On the other hand, if we start opening up and we're basically kind of shallow in Asia on Monday, and we start probing the 101s again, the probe on Monday could be more severe and could take us all the way into the hundreds, which is really going to be the key support level from which we broke out, as I talked to on a longer term basis. So to me, dollar yen is probably the most interesting of all the major pairs right now because of this incredibly tense standoff between the bulls and the bears as we go into the final week of May. Euro is really, honestly, just basically doing its typical range thing for the time being. I mean, if you look, euro is just if you look at the euro on a longer term basis, what's astounding is just it seems like it's done a lot, but it's actually moved very little. We've basically been in the 28-30 range since pretty much the start of the month, right? We fell into the 30 range at the beginning of the month, and this is really where we've been. There is no doubt that the euro is finding some support, and there's no doubt that the dollar rally against the euro may be losing some of its steam as we're starting to get higher lows across the board. So we found the lows first at 28s. Then we found the lows at 28.50s. Now we seem to be finding the lows at 29s, 100s. All of that builds up a stronger and stronger case on a day-to-day basis for more upside to the euro. So we took out the 29.50s. We stalled at 30. 30 is going to be a really key level. If we can take out the 30, then we're building a case towards 3,100, and now 29.50 becomes the lower level support. It's kind of slowly building upward channel that you're starting to see in the euro. All of this completely changes if we start to break down these low supports. So if 29s go and then 28.50s go, we're basically in a distribution pattern, still in consolidated phase. It's still, it's still not completely definitively negative. But if the 28s go, then it becomes definitively negative, and it looks to, at that point it starts to target 26s, 25s on the euro as a longer term decline. So we're not out of the woods by any means yet, but the euro on a near term basis clearly looking technically healthier than it was even a couple of weeks ago, as we're making higher lows, which is the key to what's going on over here. Cable looked okay today. Cable actually was probably the best of all in today's trade. Still really basically consolidating around this 50-50 level. It's not like you can get too excited about cable at this point, but a break here above 51.50 does open up the retest of the 52.50s, which is a very big resistance level. If you can, cable is kind of notorious for making relatively decent V-shaped recoveries, so it's not like it could just simply stop dead in its tracks at 52.50. If it picks up momentum, it could run through this resistance and go all the way back up to 54.50. The downside here, however, still predominates. The downside, if you break below the 50.50, 150 comes into play, and then 150.100 is a really interesting. Let's go on the dailies. We can look at this thing. It's a pretty interesting support level here. So where am I? Let's lay down the 150.100. So that's it's a big round number support. We break this, then the real support comes in at around the 49s. 48.31 was the low. So this 48 to 150 becomes the real support level. And at that point, that is actually a pretty decent buy proposition for a double bottom assumption. But whether we break down to those levels remains to be seen. It could be just simply a matter that we're making right now a higher low in cable, and the next move takes us back up to the 5300s. Similar kind of a structure as in euro, but cable is always much more funky. The one thing that is just unrelentingly weak and really finding very, very difficult to find a toehold here is Aussie. Aussie sent out a pretty bullish turnaround signal yesterday, where it was a nice big wick out. It was a strong doji. It basically states that the bargain hunters definitely found value underneath 96. And generally, these kind of signals show a turn in the trade, show a turn in the currency. But today, that pattern broke down, and we basically had more correction and more downside action. Now, it could just be a situation where they're trying to double test the 9600, which could very well be the case. And certainly, I think 9600 is going to become a very interesting battle between the bulls and the bears if we get down there in the Aussie. But the Aussie does not look like it's ready for a turn just yet. To me, the turn in the Aussie becomes interesting if we get to around 97.75, 97.80. Until that point happens, the risk of further downside still remains in place, and it's just not that interesting a place to want to spec capital, because the momentum for a strong turn like you would see here, where prices are making fresh highs, just not there. We're just not making fresh highs, and unless we're making fresh highs, you can't really be convinced about the bullishness of the Aussie at this point. It's not a bargain proposition. What else going on? Dollar CAD. Let's take a look at that just as a sort of final look. Dollar CAD's been very sticky at this 103.50 level, which is kind of interesting, and it's performing relatively better, of course, than the Aussie. If you get basically a full rejection of this 103 level, the next level here is 103. We come right back up down to 102.50s. It also puts us back into a negative Aussie CAD trade, which we're seeing here kind of very, very strongly today, right? Below parity, retesting the lows, and this actually could be a really interesting trade, a way to trade Aussie weakness. Sort of the idea here is if we do see further Aussie weakness, probably the best way that you will see it will be through the Aussie CAD pair as well. So we're now at the lows. Where's the low here? It's 99.50, pretty much the lows, multi-recent lows. So break below here really opens up the possibility of 99, and then if we get further destruction down to 98s. This kind of looks like one of the more interesting shorts on a momentum to the downside. Certainly, the potential for, if you break 99.50s, let's say we get into 99.40s, the potential to run towards 99s becomes quite strong on a momentum basis. So that's an interesting look for next week. Then the other thing that's kind of interesting on the crosses is the euro pound, which continues to flail out at the 86 level. This is the euro weakness against pound strength. The thing that makes me concerned about trying to buy this to the upside right now is rumblings around negative interest rate on the euro, increase in European sovereign debt yields, despite the fact that we seem to definitely have a turn, or not definitely, but probably have a turn on the economic macro picture, especially in Germany. The other components, the financial sector of the Eurozone, does not seem to be recovering in any way, shape, or form, and that could be a drag on the euro as we go forward. So this, safe haven to the pound flow out of the euro trade can come back with a vengeance, which is why, unless we start taking out the 86, I really want to see 86.10, 86.20 taken, and even then, you still have to fight this 86.35 high to really get convinced that this is a major bull move. The potential here is that the euro pound may have topped a little bit, and we're going to see 85s before we see 86s next week as we trade out. So anyways, this kind of how things shape up. I am gone on Monday because of the holiday. Wishing you guys the best of luck in FX trade. Dollar yen, my conclusion as the most interesting look here for next week, because we are really at key levels here, and whether we make a much more severe correction is probably going to be told in next week's trade. Wishing you guys the best of luck, the best of trading. This is Boris Schlossberg, over and out.